30 covered. Yeah, current resistance around about 35,200. What else, guys? Anything in particular you want to look at? We've got the RBNZ, I think, have we today? RBNZ. Yes, we do. 8 o'clock my time, 10 o'clock New York. Let's have a look at the Kiwi. How did it get on? So it's in consolidation mode really ahead of this meeting tonight. Analysts at ANZ Bank, Kiwi Bank, talking about the Kiwi. Hold on. So it's the lowest levels it's been all year. It hasn't broken lower yet, despite the collapses in milk prices. There is concern over Chinese markets and importation of their widest export, milk. So there's anticipation of a hawkish outcome given the sticky domestic inflation. So perhaps that's what's been propping up and not collapsing entirely. So for the day ahead then, is a day three. Day three in the 3-day cycle, you'd be in anticipation of a move up into the shorts. But if we get a positive outcome out of the FOMC, and indeed if the RBNZ is less hawkish than expected, then that could be the makings of the break to the downside, in confluence with the bearish outlook for the economy with regards to its exports and milk, China slowing up, general doom and gloom, and risk appetite tailing off. That would go in hand with that US 30 potentially breaking out to the downside towards that 50% mean reversion area. Or on the other hand, we get a hawkish outcome at the New Zealand Central Bank of New Zealand, combined with a less or a more dovish outlook from the FOMC minutes. Then you'll get that New Zealand dollar flying high. Then we can go over to gold and being asked for gold. Right, is gold making a peak formation on the downside? If it is, then it's got structure that it needs to break. It's got to get above those lows, last week's lows, and today's highs. So that's sort of a confluence there. And the price needs to get above. So we've got all of this here. It's 1913. I had it marked as the swing high. And we've got these interim highs marked up, and you've got that dotted line, that orange dotted line, which is last week's low. So this could be trapped volume for the week ahead. So this could be an accumulation phase for the move up. So gold still is bearish. In answer to your question, it's still bearish in terms of structure. But as soon as 1913, my ears will be pricking up on a break back above 1904, a test of that trend line resistance. I could put an alarm on that. Right, I'll pull that out to here at the moment. I'll put an alarm on the trend line, and this will be alerting me to prospects of a break of structure of 1913. And if we get that break of structure, then depending on how we're set up, but I'll be looking within the day itself to be getting involved as low as possible in level 1 or level 2 for a move up to target level 3 of this current range. In fact, bring it down to here. So anyone up here in here would be nice to be selling off gold accumulated down low in and around 1913 or lower. If that doesn't pay off, if we don't get a break of structure, then we're looking for the bearish structure below resistance, price action, and something to lean against with your stop above for a continuation trade to the downside. Yeah, everyone follow? Any other questions, guys? If not, we can call it a day. No, we haven't looked at euro dollar yet. We'll look at that now. Rust up. So it's been an inside day today, so we're looking for an explosive move one way or the other, or we may have looked at it. Rings a bell. We're happy to go over it again if we have. So we tried coming up. It fulfilled our targets and what we were talking about this morning. And it sold off. It sold off in the later part of the New York morning, and it has failed to break yesterday's low. It's holding in and around yesterday's close. And could this be the makings, therefore, of a move back up and targeting 109.70s for the day ahead? Now, if we can get below today's lows on Wednesday, you've got to be monitoring that to see if it makes a higher low compared to Monday's low. So today's low, 108.96. Yesterday's was down here, 74-ish. So if we get a higher low on Wednesday, then we can start to be more convinced that this is a counter trend line. That was once a bearish trend, so a bearish trend line, but we've moved out of that. We're yet to break 109.57 swing resistance. If we break that, that really is convincing for the move up and continuation all the way into last week's highs. But we've already broken this internal structure here, so that's starting to build the bullish thesis on the backside of that trend. So we are in a counter trend mode, and moves to the downside could just be bait for a bear trap to take this higher. So the Nasdaq, we looked at this earlier, and it was a failed attempt to ride high. I personally had to cash in and break even on that. And we were discussing that we could be coming down towards these double bottom lows in a bear trap, which could be the fuel finally to break this trendline resistance, targeting last week's highs. If, on the other hand, we manage to get a firm close below last month's lows, which are over here, then we're still front side of that bearish trend line, then who's to say that this can't continue lower? And in that respect, just be careful that we're not coming back up into the neckline of this M formation, which is a reversion pattern. So if you are chasing the offer in this, just note that what are we doing here? We're ending the day as a doji, which is bullish in itself. So tomorrow could be a firm move up into the neckline, and any moves below last month's low without a daily close could just be the trap for the move up. So that could happen overnight. It could happen in London, Asia, London, early doors New York, before the actual Wall Street Open, and the FOMC minutes, and then pull traders lower just to take it higher. Sure, but it'd be the same movement, same flow. The charts are virtually the same, you see? Spot the difference. Virtually the same. Yeah, same directional bias. Okay, anything else, guys? Let me know, or we'll wrap it up, and we'll see you tomorrow. Okay. You're welcome. Thank you for being here as always. Thank you. Thank you. Okay, guys, going to call it a day then. Good luck out there. Those that are trading the RBNZ. Should be an interesting meeting for sure. What else have we got on the calendar? In fact, that's another one that's hot. UK CPI, PPI, and Real Price Index, and then Euro GDP. Some employment bits and bobs. But the showdown is going to be the FOMC. Okay, guys, have a good one. See you tomorrow.